You're watching Indian Open. Now the earnings season has drawn to a close, and while strong performances have been few and far between, most companies have managed to meet expectations in the last quarter, or at least more companies have than have not. Which brings us to the question, are analysts now setting more realistic targets for the remaining part of the financial year? Have corporate earnings started recovering? What do they tell us about the underlying economic strength in this country, and what will be the expectation in the coming quarters? To talk about all of that, we have with us Suhas, Harinarayanan, the head of institutional equity research at JM Financials. Good morning, Suhas. Thank you very much for joining us here at BloombergQuint. I think, the first question would be if you could give us a sense of how you're assessing what the quarter has been from a couple of points of view. Are we just seeing a quarter that has managed to overcome the GST disruption of quarter one, or are we seeing a quarter that actually speaks of any underlying economic recovery, whether it's in demand or otherwise? Are we seeing a quarter where we can see maybe improved profitability only because of cost cutting, or are you seeing top line growth as well? What and how would you characterize the quarter gone by?
I think I think it's a long question, but to put it short, in a very short manner, I think the earnings this quarter, when I look from EBITDA and above, EBITDA and PAT, so we tend to look at it X of Tata Motors and X of financials. Those numbers have actually been better than expectations.
Okay.
At both the EBITDA and PAT level. Both are in double-digit growth, which is probably the first time I'm looking at a double-digit growth on EBITDA and PAT in the last 8 to 12 quarters. I don't know when the last time we saw a double-digit growth in EBITDA and PAT. Now, coming to your question of has it made up for the
but before you come to that, what explains this double-digit growth?
I think mainly margin expansion.
But is that on account of cost cutting? Is that on account of improved demand and therefore more pricing power in the hands of companies?
So we've seen revenue growth in double digits as well, and we have seen some form of improvement in margins as well. So we have seen some of the recovery you are talking of, post GST, which happened in first quarter. Some part of that being recovered in the second quarter. We've seen a lot of the pre-festive buying which came through in the last month actually, because I think speaking to most companies, the feedback was July was extremely bad, but August was a slight recovery and September was really good. And most companies, except those related to the real estate sector, are actually of the view that the momentum that they saw in September is probably continuing into October and November. As I said, the only sector or the companies related to the real estate sector are still in a pretty weak spot, I would think. So revenue and EBITDA, revenues have grown. Some part of the first quarter weakness have been recovered. Margins have expanded. You can name it cost cutting, you can say operating leverage. I think margins have expanded. So you have seen a double-digit growth in EBITDA and PAT. So can I go back?
Yeah, please do. Yeah,
okay, fine. So when I look through the first half, I think the first half PAT growth, excluding Tata Motors and financials, is still, you could say is like a plus 1% kind of PAT growth. So it still hasn't made up for the shortfall in the first quarter. When I look through for all the companies, including Tata Motors and financials, it's still a minus 4% YOY for first half PAT.
Wow.
This is not for, just to a disclaimer, this is not for the Nifty or for the market. This is for a basket of companies, about 100 plus companies that we cover.
Okay. Would this largely be by market cap, I would imagine?
Oh yeah, these are the larger ones.
Yeah.
I think maybe today's the 15th, so maybe a few companies are left, but I think
sure.
About 120 odd companies.
So you said -4.
-4 for the first half.
So -4%. So 4% contraction in profits year on year for the first half.
Correct. And when I look through, excluding Tata Motors and private and the financial space, it's about plus 1%. It's almost flat. What it means for the second half?
Yeah, what's the ask there?
Yeah, the second half ask is when I look through consensus, I think consensus is still looking at like a mid-teen kind of profit growth for the full year. So, which will again be trimmed, but I think I won't blame anyone for this. I think issue is that since demonetization, I think it's been a tough task to just predict numbers. It's been Q3, Q4, Q1, Q2, again Q3 this year. I think it'll be extremely difficult to forecast numbers. But the second half ask is clearly a lot higher. And I think if you were to look at a simple 15-16% full year growth, and first half has been -4, you're looking at something like 35% YOY growth in second half. Difficult, obviously.
So what would you trim it down to?
I think analysts are still working through the numbers, but I don't want to say anything before that. But I think it could come down to close to a high single digit kind of number is my expectation at this point in time. But as I said, let's see how Q3 also goes, because in some sectors we are seeing some of the momentum that we saw in late September and October actually continuing into November as well. In a few sectors we aren't seeing that.
Okay, so what is it that you think will be able to deliver the best numbers over H2, Q3 and Q4? Guess, as you put it, it's difficult to estimate correctly. Yeah. And what is it that the market is not pricing in within those pockets?
See, if you look at the broader markets, the markets are pricing in that and more.
Okay.
Right? So I think the markets are pricing in a high, or a mid double-digit number for mid-teen number for FY18. They're probably also pricing in a.
Pockets. Those pockets. Where is it that the market is mispricing the growth that could come in or not come in?
Okay, so I think some of the high expectations are clearly in sectors like cement, some of the large cap cement names. I think clearly the expectations looks to be a little high. I think compared to what we've seen in the first half. And if you look at the disappointments in the numbers in the first half, I think the building materials, which is what I said, anything related to real estate, we're actually seeing continued weakness. So whether it's building materials, whether it's a little bit of cement, some industrials which service the real estate segment, I think that's one pocket where I think expected, not the real estate companies themselves, because what we are seeing in the sector is also a shift from possibly an unorganized to organized, right? So the listed real estate companies probably seem to benefit, but from an overall market perspective, there's all-round weakness.
I think that commodities were the best performing companies these two quarters, and thanks mostly to the rise. Is that something that you would anticipate will continue into the next 2 quarters? The weakness in one of your reports suggests, and this is exactly what we've all seen, is that we've seen weakness in pharma, we've seen weakness in IT, not as much as we had anticipated, but some weakness in IT. Would commodities be where you'd say the best gains will be had in the next 2 quarters?
So, good point. I think a large portion of this, first half growth has actually come in commodities. I mean, you saw very strong numbers in the aluminium players as well as the steel players. And the current expectation is that will continue. The strong earnings growth will continue, largely supported by global fundamentals more than anything else. So, and in the case of specific to Indian steel, you have various import protection measures, etc. So, I think that looks to be in a good spot at this point in time.
And telecom and pharma, sorry, not IT. Telecom and pharma is where the biggest cuts in terms of earnings, where the biggest earnings worries have been, and are the sectors that continue to remain under pressure even as we go into quarter 3, quarter 4.
I would think certainly telecom. I think there would be weakness in numbers in the coming 2 quarters as well, certainly in telecom. Pharma, reading through the numbers, we are getting a sense that maybe, earnings cuts have stopped except for 1 or 2 company specific. And pharma is a little more, to be honest, unlike IT or telecom, it's a little more heterogeneous. It's not a homogeneous sector, right? So you have to go very company specific. And so I would think on pharma, clearly very company specific, but in many companies we are seeing that there are no further earnings cuts at this point in time. Telecom, clearly Q3 and Q4 we should see some more weakness in the numbers as the quarter plays out.
Across the board except for Jio?
We don't want to name any company specifically, but yeah, I think we should see.
Okay, one last question from mine at least.
Yeah.
Financials, the biggies, 35% weightage. Do you think the earnings growth or whatever they've shown in first half could be emulated or bettered in the second half? I mean, and I don't know how much overall PSUs play out there.
I think it's a good point. I think we need to split it between the private and the public financials. I think from a private financials, I see no reason for some of the strength that we've seen over the years to diminish at this point in time. Public sector, I think what we're clearly seeing is that the big boys are separating from the weaker ones, and with this recapitalization exercise, etc., we think that there will clearly be it'll again separate the big boys from the weaker ones. So I think private financials, when you say private financials, you again take the banks as well as the the NBFCs. So within that, private banks, we see no issues. NBFCs, our NBFC analyst believes that we could see some upcoming margin pressures for the housing finance companies. But especially given the way the GSEC yields have moved, so from a cost of fund, the margins are very thin out there. So I think that's what he thinks. So I think we should see private banks doing fine, and all NBFCs except housing finance companies also reporting strong numbers, especially companies related to rural financing, etc. Should show very good numbers, I think.
All right, I think that you've given us a great snapshot of what to expect in Q3, Q4. Let's see if when we meet again at the end of Q4, you'll hold by, and you and all the other analysts will hold by the high single-digit number, or the economy will disappoint us yet again. So thanks very much for that, Suhas. Thank you for being here this morning.
Thank you.